Hi, today let me talk about something which everyone watching this is always interested in, which is Kya Lagta Hai market. How does the market look now? Let me just talk a bit about what I had said on this right from end of 2021, which was that India would be an outperforming market, which it was. Of course, in 2022, that was still not good enough to give India positive return in dollar terms, because globally 2022 was about the worst year in asset markets. You'd be surprised, for nearly a century. So it was as bad as that. But India, of course, was an outperformer, and we think that outperformance trend will continue. And partly it was because 2010 to 20 was a very bad decade for Indian markets, where it performed much lower than its historical average as well as relative to other global markets. And as you know, I'm not one of those who's permanently selling the India growth story. But in March this year, I had tweeted with no ifs and buts, no caveats, etc., saying this is the time to get back into the markets if you are not invested. So whatever is your equity allocation, please invest it. And the other question which I answered was that, is this the bottom? And I said, I don't know whether it's the exact bottom. It is definitely somewhere close. And I was later on looking at it. The index was in the 16,900 range then. So it's up about 10% now, around its all-time high. Maybe by the time you watch it, it would have crossed its all-time high. So the question is, what now? My perspective still remains the same, that global equity markets still look good as an asset class, and India looks even better, meaning it is in the outperforming bucket. And even if you look at fundamentals, it is not as if the valuations are terribly stretched. If you look at the Nifty PE, the last I looked at it, it was about 22, which is against what it was in 2021, around the mid 30s, because earnings have grown since, of course, 2021. Previous year, because of the COVID, there was a disruption in the earnings. But even if you look at the growth rate, while in the last quarter, earnings growth for the Nifty was about 8%, but if you remove the commodities, which is metal, steel, cement, and energy, then it was more like 25%, which is not bad at all. And also, this is something I have been talking about for the last few months, that what can be a game changer for India is the fall in crude prices, because crude prices are down dramatically from last year, and that drives a lot of things for both the Indian corporate sector as well as the economy. So as far as the economy is concerned, it brings down inflation, it brings down the current account deficit, therefore it gives a boost to growth. As far as companies are concerned, the crude prices coming down means the prices of a lot of downstream chemicals, petrochemicals, come down, and that has a positive impact on many industries, from FMCG to chemicals to textiles, paints, even cement. So that could be the next phase of the drivers for earnings growth. And I think that impact has not come much in the last quarter of FY20 or financial 23, and you will see that impact from the quarter ending June. So those could be the drivers. But of course, the market is always not one-to-one with what happens in the economy. But in this case, I think the broad trends will be similar, that you will see good news on economy, corporate earnings, and also the market. So that is as ambiguous as it gets. So once again, even if you did not invest in March, don't wait now, because people who wait the fences thinking that I'll invest when things are clearer, by the time the things are clearer, the market has run away, and you tend to then invest near the peak of the market. And I was looking at mutual fund inflows, and that is what happens, that people invest near the peak of the market. So don't make that mistake. Don't miss out on the next up move.